Welcome back. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals, here with this week's QQQ Trade Update. QQQ has dropped quite a bit since last week, down around 2.5% just today. With the share price hovering near $470, that meant some decisions had to be made. I rolled my cash secured put for almost no premium, basically a pittance, but it was enough to avoid being assigned at $516 a share today. And that felt like the right move. I looked at lower strikes and even considered expirations further out, including the monthly expiration in May, but I couldn't get a decent premium for a lower strike. So I went with a 14-day roll to keep things flexible and so I can check back and make adjustments sooner. As for the covered call, I decided to just let it expire worthless today. With QQQ down sharply, I'm hoping I'll be able to get a better premium selling a covered call next week. Let's take a look at the numbers and walk through why I made these choices. The share price of QQQ has dropped to $471.27 per share. I have 130 shares in this account, and I have sold a cash secured put with a strike price of $516 and a covered call with a strike price of $520, and it's time to roll them both. The $516 put is in the money, so ideally I would be able to roll it down to a lower strike price and still generate a net credit. In order to do that, I may have to roll it out more than 1 week, maybe even as much as 1 month. So let's look at what the choices are. Rolling it out 7 days, keeping the same strike price, will generate almost no premium, and that's because it is so far in the money. Let's take a look at the option chain and see what rolls might be available. Want to learn more? I've written 3 easy-to-read guides for novice investors, from stocks to safe options to bull put spreads. These books break it all down step by step. Available now on Amazon. Read on your computer, tablet, or Kindle. Closing the put is going to cost close to $4,600. I'm going to look out 14 days and 28 days and see what's available. It looks like I may be able to roll out 14 days to April 11th and lower the strike price from $516 to $515 and still generate a very small credit. I'm not sure that I can get that, but I could give it a try. A better roll might be to go out 28 days and lower the strike price by $1 a share, just to get it closer to the money and set myself up for a better roll next time. Even going out as far as May 16th, may get me a slightly better premium. I'm going to look at rolls for both April 25th and May 16th, and I will be seeing what roll will generate a net credit, and if possible, I will lower my strike price. My first attempt will be to roll 14 days, lower my strike price by $1 a share, and try to generate a $25 credit. After waiting a minute, it does not look like that one will fill, so I'm going to edit it and keep the same strike price. If I'm successful with this roll, the premium I receive will be pretty negligible, but the benefit of rolling out is to buy some time, or actually get paid a little bit for some time while I wait for the share price to recover. Neither of those seems to be filling, so I'm going to go out to the monthly expiration in May. Oh, well, while I was about to do that, it did fill. Let's see what we got for it. All right, it filled at $20. It's not a great roll. I had to keep the same strike price. I only received $20 less some trading fees, but I did avoid assignment today, generated $18.68, and have created a little buffer for the share price to recover. Now let's roll the covered call out to the same expiration date of April 11th. As I'm considering what strike price to choose, I see that my adjusted cost per share is $418.89. So if these shares are called away from me, I will make a profit, but I am going to try to find a strike price for the covered call that is higher than the $516 strike for the cash secured put. The $520 strike price for the April 11th covered call would bring me between $8 and $10. And considering that today the share price is down 2 and almost 2.5%, I think I'm going to skip this covered call, but I expect that there's going to be some kind of recovery next week. So I'll wait until Monday and sell a covered call expiring April 11th and see if I can get more than $9 or $10 for it. So this covered call will just expire out of the money today, and this extra $18.68 will reduce my average adjusted cost per share by just a few pennies. This is not a great roll, and this is not a very lucrative trade adjustment, but I did avoid being assigned and created a little more time for the share price to recover, and we'll just keep monitoring it and waiting for things to turn around.